Are you truly serious about trading? Not just dabbling once in a while, not just seeking the next magic indicator, but ready to put in the hard work that separates the amateurs from the professionals? If so, here's a challenge so intense that most people will never even try it. For the next year, analyze 500 charts every single day based on one specific trading strategy. This might sound extreme, but if you commit to it, you will develop the type of intuitive market understanding that few traders ever attain. Why 500 charts a day? Success in trading does not come from casually browsing social media or taking random hot tips. True success emerges from repeated exposure to price action until your subconscious starts to recognize patterns automatically. Athletes reach elite levels by practicing fundamentals thousands of times, building muscle memory that translates seamlessly onto the court or field. In trading, your muscle memory is your ability to quickly identify high-probability setups. The fastest way to build that is by scanning chart after chart, day after day. Consider it like learning a new language. The more you immerse yourself, listening, speaking, reading, the faster you grasp the nuances. In trading, your immersion is analyzing, marking up, and studying a massive volume of charts. If 500 a day sounds daunting, that is exactly why it works. The challenge will push your brain to absorb patterns and market conditions faster than any casual approach ever could. Pick one strategy and master it. Before you even start, make sure you choose only one strategy to focus on. Too many traders hop between multiple indicators or methods the moment they see a losing streak. That approach leads to a shallow understanding of each technique. Real mastery happens when you stick to one system long enough to discover its subtle nuances. Below are several strategies you could pick. Choose whichever resonates with you, but commit to it. Support and resistance trading. Moving average crossovers. Indicators like MACD, Bollinger Bands, RSI, Heiken, Ashi charts. Price action and candlestick patterns. Trendline breaks and retests, breakout trading. Every one of these methods, and many that I've not mentioned, can be profitable if you truly learn its intricacies. By trying to juggle multiple methods at once, you will never give yourself enough time to grasp the details that elevate a strategy from mediocre to profitable. Define your strategy clearly. Having picked a single approach, you must articulate its rules clearly. A strategy is more than a vague idea like, I trade moving average crossovers. You need crystal clear guidelines. Entry conditions. When do you get in? For instance, if you are using a moving average crossover, say the 50 crossing above the 200, do you require the candle to close above the crossover? Do you wait for a retest? If using support and resistance, do you wait for a bullish engulfing candle at support? If you are an options trader, do you enter once implied volatility meets certain thresholds? Exit conditions. When do you get out? Is it on a trailing stop, a fixed profit target, the next crossover, or a specific candlestick signal? Spell this out so there is no ambiguity. Risk management. How much do you risk per trade? 1%, 2%, or something else? Where do you place your stop loss? Do you adjust stop losses if the trade moves in your favor? Time frame selection. 5-minute charts for day trading, 4-hour or daily for swing trading, weekly for position trading. Choose a time frame that aligns with your schedule. Market universe. Which markets will you trade? Stocks, Forex pairs, crypto, commodities, indices? While it is tempting to jump around, focus on what makes sense for you. Without this level of specificity, your 500 charts a day commitment can become random scanning. Clarity in your rules ensures that every chart you look at either meets your conditions or it does not. The repetition of applying these rules across hundreds of charts is exactly how you refine and strengthen your method. Now, how to analyze 500 charts. Daily, committing to 500 charts a day might sound impossible at first, but with a systematic approach, you can do it. Here is a step-by-step workflow. Gather tickers and time frames. If you trade stocks, compile a broad watch list or multiple sector-based watch lists. If you trade Forex, include major, minor, and some exotic pairs. For crypto, scan a range of coins. You can also mix up time frames. Looking at daily, 4-hour, hourly, or even 5-minute charts counts toward your total. Quick glance scan. Spend only a few seconds on each chart. Is your signal present or not? If not, move on. This is not the time for deep 10-minute analyses per chart. You are training your eyes to spot your setup fast. Mark or flag potential setups. For charts that match your criteria, mark them for a deeper review. For instance, if you see a perfect support bounce with a bullish candlestick formation and a surge in volume, flag it. Record observations. Keep a spreadsheet or journal. Document the date, ticker, time frame, and setup. Note any interesting additional details. Maybe volume is higher than average, or perhaps the market just reacted to news. Follow up. After a certain time, hours, days, or weeks, depending on your chosen time frame, revisit flagged setups. Did the trade succeed or fail? Why might it have played out that way? Stay efficient. Use charting software shortcuts, watchlist features, or folder systems. The more streamlined your process, the easier it is to maintain daily consistency. Deep dive. What to look for in each chart. Even though you will be scanning quickly, here are the core elements you want to register. Trend direction. Is the trend up, down, or range-bound? If you are a trend trader, you only want to trade in the direction of the overall trend. If you are a mean reversion trader, you look for overextensions in range-bound markets. Key support and resistance. Mark horizontal zones where price has reversed previously. These are prime spots for potential trades if aligned with your method. Indicator confirmation if applicable. Whether it is MACD, RSI, or a moving average, quickly check if the indicator is giving a clear read. For MACD, is the histogram growing? For RSI, is there a divergence from price action? Volume and volatility. Is volume higher than average? That often signals a significant move. If you trade options, do you see changes in implied volatility or the VIX that might influence your entry or exit? Candlestick patterns. Do you notice bullish engulfing, bearish engulfing, pin bars, or dojis at critical levels? If so, that might reinforce or contradict a potential setup. Time of day or news. Keep in mind that certain assets trade more actively during specific sessions. Also, watch for major news events that could distort short-term price action. Recognizing these elements at a glance is a learned skill, honed only by continual repetition. Over time, your eyes will automatically go to the most critical points on each chart. Why most traders do not achieve this level of dedication? Many traders fail because they chase the newest method the moment they see a loss. Others skim a handful of charts and think they have researched enough. The harsh reality is that real expertise requires massive, deliberate practice. This 500 charts a day routine separates those truly committed from those who only talk about wanting to succeed. It will be hard. There will be days you feel too tired or busy. That is precisely why it works. Sticking to a routine of this intensity forces you to develop the discipline and mental toughness necessary for consistent profitability. In trading and in life, the greatest rewards often come from the most demanding commitments. Stories of success. Through practice, every field has examples of individuals who rose to greatness through systematic practice. Michael Jordan showed up at the gym before dawn. Day in, day out, he refined his free throws, dribbling, and footwork. Kobe Bryant reportedly took hundreds of shots a day during off-seasons, sometimes exceeding 800. That relentless practice built the Mamba mentality that earned him 5 NBA championships. Jimi Hendrix played his guitar almost constantly, even sleeping with it nearby. His groundbreaking style emerged from hours of experimentation and practice. The 10,000-hour rule, popularized by Malcolm Gladwell, emphasizes how consistent, focused repetition leads to mastery. If these icons needed ceaseless, deliberate practice to reach the top, why would trading be any different? Statistical data on practice and performance. Numerous studies confirm the power of repetition. Cornell University research shows that spaced practice trumps cramming. Instead of occasionally glancing at charts, analyzing 500 every single day is spaced practice on steroids. K. Anders Ericsson, the psychologist behind much expert performance research, underscores how deliberate practice, meaning practice that includes immediate feedback and continuous refinement, is the defining ingredient for top-level achievement. NBA teams that devote extra time to free throw drills often see an improvement of 5 to 7% in free throw percentages. That margin can change the outcome of critical games. Translate that to trading. An extra 5% in your strategy's win rate could turn a break-even account into a steadily growing one. Chess grandmasters commonly examine tens of thousands of board positions. The pattern recognition needed for chess is strikingly similar to pattern recognition in technical analysis. The repetition cements the mind's ability to forecast the opponent's moves, just as repeated chart analysis helps you anticipate market moves. 1 year of dedication. Why an entire year? Markets evolve through various cycles: bullish trends, bearish pullbacks, range-bound price action, and sudden news-driven volatility. In 1 year, you experience a broader slice of market conditions. You see holiday lulls, seasonal rallies, central bank announcements, economic data releases, earnings seasons, and more. By immersing yourself in 500 charts a day across all these shifting environments, you gain a real-world education no short course can match. What you will gain after 1 year. Picture yourself 365 days from now, having scanned a total of 182,500 charts. This will build an intuitive sense of your strategy. You will know exactly how your system behaves during high volatility, low volatility, news spikes, and everything in between. Nuanced understanding of market structures. You will quickly identify subtle clues, like small volume divergences or wicks at key levels, that signal a potential reversal or continuation. Emotional resilience. When you have witnessed setups fail and succeed literally thousands of times, you will not panic over a single losing trade. You will understand the probabilities and trust your process. A personal playbook of examples. By noting and following up on each chart, you will develop a catalog of scenarios. This is what a textbook breakout looks like. This is what a fakeout resembles. This is what volume confirmation really means. Most importantly, you will develop genuine confidence. This is not bravado or guesswork. It is confidence grounded in massive experience. Additional tips to maximize this challenge. Keep a detailed trading journal. Write down why you flagged each setup, your emotions, market conditions, and the result. Over time, patterns in your notes may reveal truths about your trading personality and your system's strengths or weaknesses. Start small if needed. If 500 charts sound impossible, begin with 100 or 200 a day. Ramp up as you become more efficient. Use chart replay features. If you have access to a platform that offers replay mode, you can practice analyzing past data as if it were unfolding in real time, accelerating your learning. Compare multiple time frames. Even if you mainly trade the daily chart, a quick glance at the weekly can give context. A look at the 4-hour might refine your entry. This helps you see how your strategy behaves across different scales. Collaboration and accountability. Consider teaming up with a friend or a trading group to compare notes. However, keep your focus on the chosen strategy. Do not let others derail your consistency with new ideas every week. Short-term versus long-term correlations. Analyzing. A vast number of charts daily sharpens your awareness of correlations. Short-term correlations. For instance, if the US dollar strengthens, multiple currency pairs might align in the same direction within that day or week. Similarly, if the VIX volatility index spikes, it might affect overall market sentiment. Long-term correlations. Over months, do you see tech stocks rallying alongside rising economic optimism? Are metals like gold and silver moving in tandem during inflationary times? Understanding correlations can provide extra context and potentially guide your confidence level in certain setups. Volume and volatility. VIX. Volume and volatility give you insight into the momentum behind price moves. Volume spikes. A major spike in volume relative to average could signal strong buying or selling interest. If you trade breakouts, that spike can confirm a real move rather than a false one. VIX movements. If you trade the S&P 500 or other indices, watching the VIX is crucial. A rising VIX often implies increased fear, while a dropping VIX could mean calmer markets. Options traders in particular use implied volatility to gauge option premiums. When you routinely scan 500 charts, you will see volume and volatility transformations happen repeatedly. This exposure makes it easier to gauge whether a move is likely to continue or fizzle out. Let us be honest, scanning 500 charts each day for a whole year is a massive undertaking. It is natural to encounter doubts or fatigue along the way. This is where you discover if you are truly committed. Remind yourself of the end goal, a level of trading mastery most people never reach. Think of it like training for a marathon. The process is grueling, but finishing brings immense personal satisfaction and skill development. Embrace the grind. Every day you complete your scans is a day you fortify your mental resilience and your eye for setups. The power of compound improvement. There is a concept known as the aggregation of marginal gains. Improving by just 1% daily might seem negligible, but over hundreds of days, these small gains compound into something significant. Every time you scan a chart, you become slightly faster, more accurate, and more confident. After a year, that incremental growth adds up to a profound edge in the market. Compare it to the trader who only does minimal research or relies on chat room tips. They might find a good trade now and then, but they will never have your depth of understanding or your ability to adapt when market conditions change. Not every day will be epic. 1 year is a long time. Markets have periods of low volatility, holiday seasons where volume dries up, or random spurts of volatility triggered by global events. Some days you may see the same patterns repeated in chart after chart. Other days everything seems misaligned. Recognize that this is part of the journey. By enduring every type of market environment, you gain a well-rounded view that protects you from being blindsided later. Traders who embraced data. Overload Richard Dennis famously taught the turtle traders, proving that trading could be learned if you followed a systematic approach. His students analyzed countless market situations, logging trades with meticulous detail. Many of them went on to great success. Their secret was the willingness to put in the time, follow rules, and learn from each scenario. Paul Tudor Jones is known for intensely studying historical chart patterns. He pored over past crashes and major rallies to identify early warning signs. His success is not a fluke but a result of deep data-driven preparation. Midway check-in. Ask yourself after a few weeks, are you staying consistent or have you made excuses to skip days? The key to building a successful habit is to address obstacles early. If you feel overwhelmed, reduce the number slightly and then build back up. If you find yourself bored, remind yourself that boredom is often a sign you are mastering the basics, and that is a good thing. Habit-building techniques. Set a daily reminder. Put an alarm on your phone or an event on your calendar that says, scan 500 charts. Treat it as a non-negotiable appointment, like going to work or picking up your kids. Habit stacking. Attach your chart scanning to something you already do daily, such as having your first cup of coffee. Right after you finish coffee, sit down and knock out 50 or 100 charts. Reward yourself. After completing your daily scans, allow yourself a small treat or break. Even minor rewards help reinforce good habits. Long-term impact on your trading edge. Once you have been doing this for months, expect these improvements. Lightning-fast pattern recognition. You will see a bullish or bearish setup almost instantly. Where others pause in confusion, you will already be planning your trade or deciding it is not valid. Emotional stability. One losing trade will not shake you. You know from your massive sample size that losses are part of the journey. Refined strategy. Through thousands of observations, you might make small tweaks, like adjusting stop levels or refining entry triggers, to improve performance. A robust mental library. You will have an internal catalog of scenarios. Bullish breakouts with low volume, head fakes, proper retests, divergences, etc. That sense of mastery is something money cannot buy. It only comes through immersion and commitment. Practice makes almost perfect. This principle holds in every discipline. Tiger Woods did not become a golf legend by occasionally hitting a bucket of balls. He practiced obsessively even when it was not fun. The same applies to trading. If you do not enjoy the process, trading may not be for you. For those who persist, the 500 charts a day routine can be transformative. Thomas Edison famously tested thousands of materials for the light bulb filament before finding one that worked. Beethoven spent countless hours rewriting sections of his symphonies. In each example, the genius was not just raw talent, it was the relentless drive to keep refining. Final thoughts. Are you ready to become the Michael Jordan of trading, the Kobe Bryant of chart analysis, the Edison of technical setups? If yes, take on this challenge. 500 charts a day for one entire year focused on one strategy. This will not only sharpen your skills, but also differentiate you from the crowd of traders looking for shortcuts. Yes, it will demand time and discipline. Yes, you might get bored or frustrated. But at the end of 12 months, you will have a market blueprint embedded in your mind. You will not need to chase tips or doubt your entries, because you will have personally witnessed your strategy. If you found value in this approach, consider committing to the 500 charts a day challenge starting today. Pick your strategy, set your rules, gather your watch lists, and get scanning. Let us know which strategy you plan to master and how you will keep yourself accountable. Action is the only path to real transformation in trading. Are you ready to act? The next year could define the rest of your trading career.